Ladies and gentlemen, welcome back to the Wall Street Bull. Anthony here. I hope you're all doing well and staying safe out there. And more importantly, I hope you're all trying to remain as positive as you can. I know it's hard right now, but guys, let's get straight into it. I just want to say a massive shout out and thank you to every single one of you who have subscribed. If you're new to the channel, please make sure you smash the subscribe button down there and turn on that little bell notification as well. Because as you can see right here, I love doing these videos on a regular basis, documenting my journey with investing, with cryptos, dividend stocks, growth stocks, talking about passive income, building financial freedom, and yes, my goal at the end of the day is to build generational wealth. So come along this incredible journey. This is just getting started. It's really getting interesting and there's some incredible buying opportunities, all right? Little disclaimer, I am not a financial advisor. Please do your own research and due diligence for this stuff. I don't want to see anyone get financially hurt. Please be careful out there. My golden #1 rule is only invest what I can afford to lose. Yes, we don't like to lose, but you have to set a limit for yourself because you can lose money like that, especially during these very volatile times, all right? So please be careful out there. Do your own research. All right, formalities are out of the way. Yes, it's time to accumulate cryptocurrencies. 87% of you has said yes. That is incredible as well. Another post here 8 hours ago is obviously, look at this. 2017 XRP was the best performing altcoin. So look at that. Unbelievable stuff here. 36,000%. Incredible. Anyway, let's get into some interesting stuff with cryptos and stocks today. I'm talking about both because it all relates to each other. As everyone knows, the stock market's going crazy. The crypto market's crashing and all kinds of FUD and all this fear out there. And I just want to put some things in perspective here because I think it's really needed right now. And I think everyone needs to just remain very positive. So let's get straight into it. I use Coinspot here in Australia. This is where I buy my cryptos. And yes, these are in Australian dollars. If you're new to cryptos, please feel free to use the referral link below. You can get $10 in Bitcoin to get you started, but please do your own research with this stuff. But let's have a look here, guys. My favorite altcoins anyway. Bitcoin sitting at 49,000 Australian dollars. It is flat. Hasn't really dropped much below that. It's pretty much remained at 49,000 Australian. Ethereum 3,400. BNB $524. Cardano's at $1.51. XRP's at 86 cents. There are some insane buying opportunities right now, regardless of whether or not we're in a crash, a downturn, whatever it may be. The whole purpose of my video today is basically to show you that I am dollar cost averaging into all my crypto assets and dividend stocks, by the way. So this is where it's going to be very important here. So Solana, $128, Luna, $92, Dogecoin, 19 cents. Polkadot is still at $25. It hasn't removed much below that. AVAX, $86. That is down significantly, guys. Shiba Inu, Matic at $2.12. Still great buying opportunities. Cosmos, $46. Crows at 52 cents. Literally one of the only ones in green, up 5.51%. Link is at $22. Near Protocol, $15. Algo is at $1.31. Tron, 7 cents, guys. FTM, $2.95, up slightly to 1.37%. Stella's at 27 cents. Hedera's at 29 cents. Mana is at $2.81 right now. VeChain is at 7 cents. It hasn't dropped below that, which is really nice. Great opportunity to dollar cost average in. Axie Infinity is at $73. This is a good entry point. Sandbox at $4. That's virtually half price. Theta, $3.62. This has been pumping. I remember a couple, months back, this was like at $14. So it's getting very cheap. Harmony One, 27 cents. IOTA, $1.10. Let's keep scrolling down here, guys. The graphs at 55 cents. My other favorites here are Curve DAO. This is $4. Quant, $48. That is incredibly cheap. I think that's a very good entry point. Gala Games at 25 cents. I'm going to be adding more of that. Neo, $25. You do receive passive income from that. Let's keep scrolling down. XDC's up 4.93% to 9 cents. So again, unbelievable buying opportunities right now. Yes, there's a lot of fear out there. I can see it in the comments and in Twitter and all on social media channels. A couple of big influencers like BitBoy have basically come out and said, we're in a bear market. Meet Kevin as well has come out and basically sold all of his investments off, and I believe he's shorting the market with all of his investments. So look, everyone's different. Everyone's going through their own, financial world at the moment. But me personally, I'm staying positive, dollar cost averaging into all my investments with stocks and cryptos. So this is what I'm doing. So I'm going to get into some news now. Let's have a quick look at this. Crypto bubbles at the moment. Everything's in the red. I am not worried at all because there are incredible buying opportunities to dollar cost averaging to add to my positions, because this is really where wealth is made. I don't care what anyone says. This is the truth. You've got Rob Kiyosaki coming out saying he bought Bitcoin at like ridiculous prices, and if it drops below 20,000 USD, he's going to be buying more. I mean, the big boys are buying more cryptos when the price drops. This is where wealth is actually made. So again, I'm not concerned about this. And for those of you who want to know what dollar cost averaging is, here it is. This is an article from MLC, which is like our 401k super fund sort of investment, thing here, where like retirement. So I'm going to go through this. So dollar cost averaging involves investing a set amount of money at irregular intervals, guys. So every single week or month. By investing this way, you are not attempting to pick the lows or highs of the market, but rather investing at a fixed dollar amount regardless of investment market trends. This is for stocks and cryptos. This goes without saying. This is basically what dollar cost averaging is, right? So how it works. The following example shows a dollar cost average share investment. A fixed amount of $1,000 was invested in a share each month as the market price fell and then recovered to its original value. So check this out. You've got month one, $1,000 share price, $20. $1,000 month two, $1,000, so $20 share price. You can see here, month three dropped down to $10 share price. Month four dropped down to $15, back up, sorry, 15, and then month five, $15. So total amount invested was $5,000, and it purchased 332 shares. So basically stocks or crypto, whatever, same thing. So in this example, by dollar cost averaging into the market, the total shares were purchased at an average cost of $15.06. After 5 months, the investment was valued at $6,640, 332 shares at $20 per share. A profit of $1,640. If the shares had been purchased at the commencement of the 5 months, i.e. at $20, there would not have been any gain on the investment when the shares returned to their original value at the end of the 5-month period. The $5,000 invested would still have been the same value, ignoring any dividend income. Anyway, so the benefits. By regularly investing as an investment market, you are not relying on timing strategies. So you're not trying to time the market. This is what I do not do, because nobody can get the market timing right. I mean, very rarely do people get it right with all their predictions and technical analysis. So dollar cost averaging is an incredible strategy which I implement literally every week. Aimed at picking when a market has bottomed or peaked. So you don't need to time that. Dollar cost averaging imposes a helpful investment discipline by completely ignoring timing issues. It may be beneficial if the markets fall. This is because the only fraction of the total amount to be invested is exposed to declines in the market. Also, when the market price falls, your regular investment amount will purchase more investment shares or units. Prime example, cryptos right now, and stocks for that matter. And it may provide a sound savings regime and suitable investment strategy for people with regular income but without large sums to invest. Yes, there are some negatives to this as well. I'm going to go through those as well. When the market prices are trending upwards, a portfolio purchased up front will do better than a portfolio purchased using dollar cost average. So say, for example, Shiba Inu skyrockets right just before that. Of course, people are going to do better, obviously, because it's, without saying, the price is going to go flying. But again, long term, dollar cost averaging is always better. So check this out here. Over time period in which prices fall steadily, a dollar cost averaging portfolio will still lose money. Nonetheless, dollar cost averaging will generally lose less than an upfront purchased portfolio. That's pretty much dollar cost averaging in a nutshell, because I'm getting a lot of comments about what it is. So basically, that's what it is. Some other news here, guys. World's largest asset manager, BlackRock, files for blockchain tech ETF. For those of you who do not know who BlackRock are, please go and Google them. They are one of the biggest investment companies and firms on the planet. Them and Vanguard literally own every single company that you and I know, that you are watching this video, you and I know of in the supermarket, fuel, manufacturing. They own the majority shares of every single company on the planet. Them and Vanguard. Go look it up. Crazy stuff. There is a website, Lou Rockwell or something like that. There is a video on who controls the entire planet. It's these two companies, BlackRock and Vanguard. They have just applied for this 13 hours ago, so this came out in the news. I am not in a bearish state of mind whatsoever when it comes to cryptocurrencies. I still believe that there is a long way to go. And yes, I'm a long-term investor, but guys, when BlackRock comes out and says they're making it, going to go launch a blockchain tech ETF, what does that say to you? So the big boys are buying, they're starting new ETFs for institutional money for crypto. That's incredible. So this is another article as well. Everyone's talking about this thing, the report coming out from the Fed. Experts react to the Fed's digital currency report and falling prices for Bitcoin and Ethereum. Here's what investors should know. I'm not going to read this full-blown report, but I'm going to go straight to the bottom line here, guys. What does this report mean for crypto investors? While there probably aren't any immediate changes in crypto investors shouldn't be made based on the Fed report released this week, it's a good reminder that policymakers are paying attention to how participations of crypto are taking shape. The Fed move means that people who are thinking of crypto as an actual currency are going to get their bubble popped, says Chen. Many Bitcoin types were thinking that it is a currency and that it would replace traditional currencies. Well, I think it is anyway, because it's well and truly going to be a game changer for the financial institutions around the world and banking in general, especially with these ISO 222 compliant projects. Well, if the Fed or the European Central Bank and other central banks have anything to say about it, the fundamentals of cryptocurrency investing remain the same. Experts say you should stick with two of the biggest cryptocurrencies, Bitcoin and Ethereum, and only invest what you're okay with losing. No more than 5% of your total portfolio. That's entirely up to you, but the key point here is only invest where you can afford to lose. That's the main goal right here. That's what I live by. I'm not stressed by these huge price fluctuations, 20, 30, 40, 50%, 90%. I'm not stressing about it because I've invested what I can afford to lose. And I just let it do its thing. That's the key here. Always prioritize important aspects of your finances, and this is a big one as well, such as saving for emergencies. Everybody in general should have an emergency fund, at least 3 to 4 or if not 5 months worth of savings in your bank account for a rainy day. Everyone should have that. I have that. Everyone should have that, just as a backup. So if you lose your job or you've lost your income, you can support yourself. That is very key here, guys. Some other stuff here, guys. Let's have a look here. Paying off high interest debt, credit cards. I mean, that's hard. I mean, I know everyone struggles with that stuff, but that is key because you can reduce your debt. And saving for retirement. Well, this is where I invest in dividend stocks because that is my retirement. And obviously I look at the superannuation, all that business as well. So here we go. Ahead of cryptocurrency investments. As for where you buy and trade crypto, stick with the mainstream high volume cryptocurrencies exchange like Coinbase and Gemini and blah, blah, blah. Regardless. So these big, reports and all these news articles basically are saying that crypto is, not a solid investment. Whatever. That's entirely up to them. It's just opinions and FUD out there in the mainstream media. Cryptocurrencies are well and truly going to be adopted by the world. It is happening right now, and mainly all this stuff is coming out from the United States, and this man right here, Gensler, Professor Gensler, gets an F on crypto. I mean, the guy here basically has screwed up a lot of people with XRP. I mean, these people have been investing in XRP, and he's basically destroyed it by going after Ripple and affecting the price in the market. And it's really interesting, this article. So crypto insiders looted Gary Gensler's nomination to chair Securities and Exchange Commission last February. They thought Massachusetts Institute of Technology professor who taught blockchain classes would bring an enlightened approach of crypto compared with the scattershot, perplexed style of his predecessor, Jay Clayton. But a year in, the professor gets an F in crypto guidance and leadership. Well, we all know that. He has encouraged the worst bureaucratic instincts of the federal government, deepened regulatory confusion, and thwarted any hope of progress during his tenure, all while claiming the mantle of the little guy defender and the public interest protector. Anyway, I'm not going to get into him, but guys, there's a lot of stuff happening with regulation in the world. I mean, look, yes, we need some regulatory clarity around cryptocurrencies to get them through, but guys, crypto is not going anywhere. It is here to stay, for sure, without a doubt. Another thing I just want to point out as well in regards to stocks as well, because I'm going to talk about stocks and buying the dip. This is a chart from the last 90 years and the S&P 500. The last 90 years. This is going even back before 1950. I'm just going to quickly zoom in here. You can see the chart here. Look at the value of the S&P 500 over the last 90 years. Yes, there's been dips. There's been corrections. But again, in 2021, guys, where we are now, I mean, you just have to look at it. It's always going up. Things recover through wars, through, all kinds of events that happen, global financial crisis, all this kind of stuff. You just have to be positive and remain, very, very, very vigilant with what's happening out there. But guys, dollar cost averaging is where the money's made, straight up. And I just want to go here. Obviously, we've got some other stuff here. With crypto winter back, the White House is making big plans for the sector, guys. Again, monetary policy and regulatory environment. You've got interest rates, that could come out this year. Inflation, all-time highs in the United States at around 7%. Here in Australia, we're not so bad as yet, but things could turn out worse. So there's a lot of uncertainty out there, but I just want to remain very positive in this space because there's some really good opportunities here. Also, I'm going to go straight into trading view here because I just want to show you something. This is the total market, crypto market on trading view. I don't know if anyone's actually done this, but I'm going to zoom out here, right? Look at this uptrend from 2000, before 2015. You can see it on the screen. Look at the uptrend. There is a linear regression line literally going straight upwards on this chart for the total crypto market. And if you look at where we're at the moment, it's a bit hard to do this on the phone here, guys, but I'm just trying, so bear with me here. Whoop, no. Let's just go here. I'm going to zoom right out because it's just really hard to show this small little blip that we're all looking at right now. I'm going to fix this right now. Anyway, there you go. There we go. I've just fixed it. Sorry. Okay. Just put things in perspective. Look at this. Look at this uptrend right here in the total crypto market. That little speck of red right there is what we're experiencing right now. $1.59 trillion USD. I don't think we're going to be seeing this going back to 2015 levels. There's no way. Too much adoption happening out there. This is why I'm saying zoom out. You can clearly see the total crypto market right there. Look at the uptrend. Yes, there was a big one down in 2017, 18. It dropped, but it still didn't drop back down to where it was in 2015. This is where I bought into cryptocurrencies around 2017, so I'm still holding it from then. So again, we're still early in this space, so nobody should be stressing that much, all right? Let's go and have a look at some interesting stuff here. I just want to show you. This is my stake stock portfolio for those of you who are invested in stocks. I just want to show you something really interesting, right? This is my ExxonMobil stock right here, right? So I'm currently at $72 a share. I've made a 47% return in that investment, basically because I bought all throughout 2020. So it just goes to show, I mean, if the stock price was down dramatically, I mean, if you go to 2020 when it just dropped right there, like, what are we now? That's March. That's when the situation happened around the world. $32 a share. It's now $72 a share. Go back to like Tesla, for example. Let's just have a look for here. This is what dollar cost averaging is. I just want to show you guys. $934.43, right? I've made 102% return. If you go to March, let's just have a look here. You can see the share price was $140, around there. Now look at the price, $943. Just showing you as an example here, and that's my portfolio. I've got 34,000 USD in stocks right now, but dollar cost averaging is incredible. It really is. It really is the saving grace. So I don't need to say it anymore. Some other stuff here, guys, in relation to James Ripple XRP. Thank you for this. And we wonder why the SEC Ripple XRP case has been delayed. The Fed's crypto legislation. This is what's probably the reason why it's being delayed as well. The Biden administration is preparing to release its initial government-wide strategy for digital assets as soon as next month. Could be a lot of fear into that, but I'm not worried about that because I'm dollar cost averaging into this stuff. Binance.us has come out and said, when in doubt, zoom out, like I just showed you. Don Huffins here, forgive me for pronouncing his name wrong. I've owned Bitcoin for years, and I'm a strong believer in both its value and asset and potential as a currency. As a leader in innovation, Texas must lead the nation on Bitcoin policy and cryptocurrency adoption. I'm committed to making Texas a citadel for Bitcoin. And I'm just going to scroll down here. Real Kiyosaki here, guys. So again, Rob Kiyosaki, I've read his book. It's incredible, Rich Dad, Poor Dad. Go check that out. There's a link in the description there. It's a really good read. Very, very important. Wow, words of wisdom. Your profits are made when you buy, not when you sell. Price of Bitcoin crashing. Great news. I bought Bitcoin at $6,000 and $9,000. I will buy more when Bitcoin tests $20,000. Time to get richer is coming. Silver best bargain today. Silver still at 50% below high. It just goes to show, man. It's all there in front of you guys. Anyway, Fear and Greed Index is at an all-time low at 11. So again, I'm not really worried about that. Solar airdrop is happening as well, by the way. For those of us in Coinspot, I believe it's going to be coming. There's no clarification on the exact date when that's coming along either. But guys, I just wanted to put out this video. Don't stress right now. My portfolio is all down. Look at my 3 commas trading bot. I just show you as a laugh. I mean, look at this. It's down significantly, 26%. All my deals are down at the moment. Look at this. I'm down and some deals are like 49%. Just let it do its thing. Just sit there. I'm not in a rush. Got nothing but time here, guys. And there is a link for 3 commas below if you're interested in trading, but it's up to you. Obviously, the market's very volatile right now, but 3 commas has been incredible. But I just want to show you guys that the best thing to do is zoom out. That's all I'm going to say right there, and I don't need to show. That's clear as daylight. Zoom out on the charts. We are still in an upward trend. That linear regression line is literally straight up. Honestly, crazy, crazy stuff. So I'm not concerned. And look at that, where it is at the moment. you can see right up the top there. That's all we're talking about right now. All right. Stay safe, guys. And I'll be dollar cost averaging into my favorite crypto assets: XRP, XDC, VeChain, Cardano, Matic, some other ones, obviously Reef, all my other ones that I'm very bullish on. So that's pretty much what I'm doing. And also my stock investments as well, by the way. Going to be adding more energy stocks because they're great buying opportunities right now. All right. Stay safe, guys. Peace. Bye.